Hello, dear friends. It is said that we journalists are mechanics of chaos, but this seems very real. I thought it was going to be a quiet Sunday, and I find the cake by surprise. It is worse than it looks, because financial panic could ensue. The forces of light do not want a sudden crash, but a gradual one. Is this the famous scare event that was so much talked about? It sounds like Chronicle of a Death Foretold by Gabriel Garcia Marquez. Opinion piece. Black Monday on 13th. The dancing starts. Financial panic. 3 banks fail. Silicon, Silvergate and Signature. Biggest crisis since 2008. Risk of a global domino effect. Chronicle of a Death Foretold. Federal authority takes control. Treasury backs deposited funds. Bank runs at First Republic Bank. More bank runs may spread. Panic may spread to other banks. Peter Schiff thinks it's much worse than 2008. Meditation to stabilize the financial system. The crisis began when Saturn entered Pisces. General Flynn issues an emergency message. The forces of light do not want an abrupt system crash. Let's start. Black Monday on 30th pokes its nose over the horizon today in what is expected to be a difficult week for the financial system. In just 48 hours, the banking sector has been shaken by the failure of 2 major banks and then a third. These banks served 2 very important growth economic sectors, the technology sector and the cryptocurrency industry. 2 US banks, Silvergate and Silicon Valley Bank, collapsed within 48 hours. Which one is the next? It is called Signature Bank in New York, and there has already been the first bank run by First Republican Bank. Will the Fed be able to prevent widespread panic over part of investors and maintain the illusion of stability in the financial house of cards? It will be very difficult. In the age of mobile phones, bank run contagion could spread very quickly and potentially disrupt the financial system starting today, Monday 13th March, when the news hits the media and the masses of humankind realize the potential gravity of the situation. Definition. Black Monday in finance is the name given to Monday 19th October 1987, when stock markets around the world crashed in a very short interval of time. The crash started in Hong Kong, spread westwards through international time zones, reached Europe and finally the US. The designations Black Monday and Black Tuesday are also used to refer to the falls on 28th and 29th October 1929, following the Black Thursday crash on 24th October of the same year that marked the beginning of the market crash of 1929. Opinions. The financial collapse began as soon as Saturn entered Pisces. According to Cobra, the forces of light do not want a sudden crash of the system. They want a gradual and balanced meltdown of the system, combined with increased awareness, which would lead to a positive financial reset. But will this be possible? Curtis the 3 says, "We won't lose our money because it is safe in the QFS." In quotes. Go ahead without worry and have faith in a great plan to save the world. He adds that the coalition is in control to take over the internet and capture all the hidden information from the dark side. When the Starlink command is activated, the entire system is duplicated and all data is transferred to the new system. It is called Operation Odin. Peter Schiff, or Odin Operation. Peter Schiff says we are on the verge of a bigger crash than 2008. In quotes, banks hold long-term paper and extremely low interest rates and cannot compete with short-term Treasury bonds, he says. Massive withdrawals by depositors in search of higher yields would lead to a wave of bank failures. The economist who predicted the 2008 economic crisis warns of a new collapse. The US is on the brink of a 2008-style financial crisis. Stephanie Pomboy, known for her prediction of the 2008 global financial crisis, told Fox News' Tucker Carlson tonight on Friday. She also criticized the government's actions, saying that interest rates cannot be raised so quickly without expecting any consequences at a time of peak speculation and record leverage. General Michael Flynn has issued an emergency message to humankind. Trump's former advisor discusses the unfolding global economic turmoil, the campaign to start a world war threat, China's 100-year takeover plan, and more. Meditation. Urgent meditation every 4 hours to stabilize the global financial system. Cobra believes that a few days ago, a faction of the black nobility used JP Morgan to trigger the collapse of the Silicon Valley Bank. This is very similar to the developments in the financial system that were occurring just before the health crisis. The Silicon Valley Bank collapse has already caused delays in Etsy payments. Bank runs at First Republic Bank and other banks which are expected to collapse in the coming days. The news. Silicon Valley Bank suffered its biggest bank failure since 2008. The country's 16th largest bank collapsed after alarm bells rang, prompting depositors to hastily withdraw their money. The lender to Silicon Valley startups failed on 10th March, falling into the hands of the Federal Deposit Insurance Corporation. The federal agency has taken control of the banking firm, reviving the ghosts of the 2008 financial crisis. Regulators shut down the troubled Silicon Valley Bank after deposit outflows and a failed capital raise plunged the bank into crisis, affecting the largest credit industry. Due to its lack of liquidity, regulators revoked Silicon Valley Bank's license after 40 years of operation. In order to protect the bank clientele, they created the Deposit Insurance Bank of Santa Clara National Bank, where funds were transferred. It became the largest failed bank since Seattle's Washington Mutual during the height of the 2008 financial crisis, and behind Washington Mutual, the second largest bank failure in US history. It is also the first bank to fail since 2020. Treasury Secretary Janet Yellen acknowledged industry turmoil on Friday and said there are some banks the department is watching closely. The end of Silicon Valley Bank came on Friday when California state regulators seized the Santa Clara institution and appointed the Federal Deposit Insurance Corporation as a receiver, meaning the agency will be able to sell assets and return money to insured depositors. About 88% 87% of Silicon Valley Bank's deposits were uninsured as of December 2022, according to its annual report. Uninsured depositors will receive an early dividend this week and a receivership certificate for the remainder of their uninsured funds. The Federal Deposit Insurance Corporation said it may make future dividend payments as it sells the Silicon Valley Bank's assets. In quotes, all insured depositors will have full access to their insured deposits no later than Monday morning, 13th March 2023. The agency will pay uninsured depositors an early dividend this week. Uninsured depositors will receive a receivership certificate for the remaining amount for their uninsured funds. It added that it may pay a dividend to uninsured depositors upon sale of assets. The agency is a guarantor for bank depositors. Silicon Valley Bank was a central player in the innovation economy. It was the backbone of the technology industry in Silicon Valley. It played an important role in the startup ecosystem by providing specialized financial services, industry expertise, a valuable network, and a strong reputation. It also offered a range of financial services tailored to the needs of startups such as venture debt, corporate banking, and asset management. These services are designated to help startups manage their finances, optimize their cash flow, and scale their businesses. Silicon Valley Bank suffered from the Fed's interest rate hike because it had the value of its investment assets, especially bonds. As a result, the bank had to resort to a capital increase as many startups withdrew their deposits from the bank because they were burning a lot of cash. Silicon Valley Bank had to sell bonds, mainly Treasury securities, at a discount to cover these withdrawals. Rising interest rates have caused existing bonds to lose value. In selling these bond positions, the bank had to take significant loss, but its attempt to raise $2.25 billion failed. Second bank bankruptcy. 2 days earlier, the Silvergate crypto bank collapsed. This bank was the go-to place for the most large crypto companies because traditional banks didn't want to do business with them, and that reluctance was due to warnings from regulators who considered the crypto industry as a risky sector. The company said on 8th March that it intended to terminate operations and voluntarily liquidate the bank in an orderly manner and in accordance with applicable regulatory processes. It added that, in quotes, in light of recent regulatory and industry developments, Silvergate believes that an orderly wind down of the bank's operation and a voluntary liquidation of the bank is the best course of action. The bank's wind down and liquidation plan includes a full repayment of all deposits. The company is also considering how best to resolve claims and preserve the residual value of its assets, including its proprietary technology and tax assets. The La Jolla, California-based bank's defeat came under pressure from regulators, particularly the Department of Justice, which opened an investigation into its business dealings with the empire of former crypto-keeping Sam Bankman-Fried, who is accused of 12 counts of fraud, stemming from the collapse of his crypto empire, cryptocurrency exchange FTX, and its sister company, Alameda Research. Silvergate was established in 1988. Initially, the bank specialized in lending to industrial customers, and at the time also offered residential and commercial real estate loans. But in 2030, the bank began counting crypto companies, when traditional banks were reluctant to do so due to the opacity that prevailed in the sector. Silvergate thus became the crypto bank. In 2019, the firm held its initial public offering, promising a complete refocus on the industry, which at the time was experiencing a renaissance. As of 30th September, Silvergate has had $11.9 billion in digital assets held as deposits. But the failure of FTX and Alameda on 11th November scared customers away. As a result, the bank reported only $3.8 billion in digital assets held as deposits as of 31st December. FTX was one of Silvergate's big clients. The question now is whether other banks will follow. Could the problems spread to other US banks, especially as suspicion may lead customers to run to these banks to withdraw their money? Third failure. Regulators seized Signature Bank in the third major US bank failure. Regulators seized New York Regional Bank Signature Bank 2 days after closing Silicon Valley Bank, as banking system supervisors tried to restore calm before markets opened on Monday. The bank's directors have been dismissed. Signature becomes the third largest bank to fail in the US, behind Silicon Valley Bank and Washington Mutual in 2008. Signature had $110 billion in assets as of 31st December, ranking 29th among US banks. It had $88 billion in deposits as of that date. A joint statement by Treasury Secretary Janet Yellen, Fed Chairman Jerome Powell, and Federal Deposit Insurance Corporation President Martin Gruenberg said that all deposit holders would be made whole, but that shareholders and certain unsecured debt holders would not be protected. Signature served clients in the cryptocurrency world, like Silvergate Bank, another cryptocurrency-friendly bank that said last week it would voluntarily liquidate. It had been suffering from an outflow of deposits in the wake of the collapse of cryptocurrency exchange FTX. The value of some of its securities had also fallen due to a rise in interest rates. Guarantees. Regulators will safeguard deposits at Silicon Valley Bank, including money not covered by federal insurance. The Treasury Department, the Fed, and the Federal Deposit Insurance Corporation announced in a joint statement issued Sunday. Depositors have access to their money starting today, Monday, 13th March. The Fed also said that funding will be offered to banks through a new facility to help ensure that banks can meet all depositor withdrawals. Any losses from the Deposit Insurance Fund to support depositors who exceed to $250,000 protected limit will be recovered through a special assessment of the banks as required by law. Fed funding will be available through the creation of a new bank term funding program, which offers loans of up to 1 year to banks, saving associations and credit unions that pledge treasury bonds, agency debt, and mortgage-backed securities, and other eligible assets as collateral. According to the Fed, the funding program will be an additional source of liquidity against high-quality securities, eliminating the need for an institution to sell those securities quickly in times of stress. The Fed says it is carefully monitoring developments in financial markets. Domino effect. According to the Dallas Fed, the housing market slump in the US, Germany, and Finland threatens to cause domino effect in global housing, with investors pulling out and potentially even dragging down markets such as Spain and Italy. The housing market appears to be in a frothy state with signs of overvaluation extending beyond the US, affecting most advanced economies. The healthcare crisis and low interest rates have put the icing on the bubble. The crisis and confinements led households to make more use of housing, while low interest rates encouraged many households, and especially investors, to jump into real estate because of the higher yields in a very low interest rate environment. The feverish behavior has been prominent in countries such as Germany, the US and the Netherlands. Mortgage rates have risen fastest in Germany and Italy, with somewhat smaller increases in France and Spain. And that's all for today. Thanks a lot, dear friends.